Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. And before we hit air, we were just joking, only half joking, that maybe we'll cover that 40-odd point distance in the next hour or so. 171, 11,171 is the high on the Nifty. We're at about 11,132, so it's not very far away. In any case, it's just a number, and that's essentially the live update, which will, of course, track it. As and when it happens, you'll know. Promise that. Okay, just a very brief comment before we get into what's moving right now. Look at what has happened over the last 3 trading sessions. I'm talking about from the lows 3 days back. The mid cap and the small cap part of the market, it looks like, is starting to come back pretty strongly. I think we have the graphics if you can. Yeah, that's what I'm talking about. Last 3 days, the mid cap and the small cap index is up almost 4% or so. Actually not almost 4%, 4% plus, 4% and some change. The Nifty is up only 1.7%. Of course, the point also is that Nifty is almost at an all-time high. The Sensex already made a record high. So it kind of made up for the lost ground earlier on. Mid-caps and small caps never really did. But I would say, and probably make a case that, and it's just a bunch of things coming together, valuations having corrected quite a bit, apathy towards that segment of the market, complete sort of, give up, which has happened in many quarters as far as mid-caps and small caps are concerned. That, all of those things combine sometimes to create some sort of a bounce in various parts of the market. And I would argue and say that maybe we are seeing the first signs of that starting to come around now. So keep an eye on that space, smaller names, smaller stocks, and the next graphic will tell you what is the quantum of underperformance still. The mid-cap index is down 25% from its life high. The small-cap index 25, and the mid-cap is down about almost 16% or so. So there is still a long way to cover. I'm not making the case that we will go all the distance, but bounces could be quite meaningful given the fact that large caps still continue to be pretty strong, and that could pull up the rest of the market, which has been ignored and has felt unloved for some time now. So, that's the broad theme that I'd be working with, even as we keep a hawk's eye on what the Nifty itself is doing, and that 40-odd points it's got to cover for it to come back to its previous high. Ekta, morning.
Hi Prashant, absolutely. I second your sentiment with regards to the mid-cap index. So while we have the Nifty, which is close to an all-time high, I think around 35 odd points away from that level or thereabout, Sensex, which has already hit an all-time high in today's trading session, we have the mid-cap index, which is still down 12% this year. So that just puts into perspective that we have a lot of work to do when it comes to select stocks within the broader markets. And let's see whether we can see that sort of sustainability come through in terms of stocks. But a lot of stocks to talk about today. We have ACC reacting to its numbers. So high point of the day up around 12.5%. L&T Infotech and L&T Tech Services also reacting to what was a healthy set of numbers, and something like an idea which is gaining because of that possible Vodafone deal going through now, and in the last legs of approval. Asian Paints, which is up around 2% ahead of its numbers today. So that stock should be in focus as well. But Sudarshan Sukhani joins in to talk about the technicals of the market. Well, Sudarshan, please apprise us. What is your strategy considering that the Nifty and the Sensex are at all-time highs or virtually there?
Well, good morning again. Well, I hope the Nifty does cross that all-time high mark, and hopefully today, and maybe while you are speaking in this 1 hour, but it should. I don't know about the time, but we are all on track to do that. Momentum is strong in the Nifty. It should be just a matter of time. So with that in mind, we should only be buyers in this index. Even now at current levels, the Nifty is a buying opportunity. So I would say go for the Nifty, go long in the index, and earlier our stops were lower. Now we can raise the stops to 11,080. So with that stop, it's a risk and a trade worth taking on the long side. Individual stocks are also mainly mid caps and some large caps. Mid caps have been doing well, Prashant was just explaining, and therefore individual stocks also in that segment have suddenly started giving us attractive chart patterns and momentum. So Sun Pharma is a buying opportunity. I have been upbeat on pharma stocks for some time, and this is in continuation of that theme. Sun Pharma is a buy. M&M is a buy. M&M has been making lifetime new highs, which the Nifty hopefully will do now. It's an outperformer, and in this market we should stay with outperformers and good quality stocks. So that's a buying opportunity. And the third is Dabur, another outperformer. So 3 mid-cap ideas for buying.
Okay, so Sudarshan, just wanted your opinion on exactly what you said. Stay with the outperformers. So you wouldn't suggest, say, going for a stock which is probably cut down in half from the mid-cap space, but is, good fundamentally, has reported a good set of numbers, etc. You would stay away from that.
I would stay away from that, yes. Now, this is not a market where mid-caps are, this rally is mainly a bear market rally in mid-caps. So while the fun is there, I do not think investing is justified at current levels. There is probably more pain coming.
Okay, I mean, that's the primary difference, right? Fundamental analysts will look at, stocks undervaluation. Technical analysts would look at newer highs. I mean, what are the cornerstones of technical analysis? Okay, well, time to address some Twitter questions now. Abhishek Dubey has 300 shares of JM Financial. His cost is 151. He's been holding for the last 3 months. He wants to know what he should be doing. JM Financial, how are the charts looking, Sudarshan?
Well, unfortunately, the charts are looking dismal. Well, ideally, he should sell and bail out. Financial services, this segment of the financial services, I mean, private sector banks may outperform, but this segment of services is likely to underperform. The decline has not come to an end. Whenever the Nifty decides to move southward to have a minor correction, again there should be a big carnage in this area. So the best trade is to accept that it didn't work out, exit this trade.
Okay, all right, Sudarshan, we're going to let you go on that note. Thanks very much for joining in and talking to us and giving us all of those strategies in the technical space. We'll speak to you later on in the day. We have some more F&O strategies lined up. Gaurav Bissa joins in from LKP Securities. Gaurav, over to you then. Stocks as well as index call.
Good morning. Index has made a swing high. We have seen a decent amount of breakout sort of coming in Nifty index, and it is on the way towards the level of 11,200, 11,250. The ideal strategy would be to wait for a dip towards at least 11,100, 11,090, and with the stop loss of 11,020, one can buy for targets of 11,200 and above. As far as stock specific recommendations are concerned, looping is looking good. We saw a good amount of correction coming in, and it's now seen a good momentum. It's moved up 10-15 rupees in last 10 minutes, and a dip towards 820 can be used to buy for targets of 840, stop loss of 810. And JSPL is another name, and Hero Motors is another name that is looking quite interesting. We've seen significant drop coming in likes of Bajaj Auto and Hero Motors. Significant shorts were seen getting built. However, it has now seen a bounce back coming from immediate support levels of 3150. Using that as a stop loss, one can buy. It would be more of a preemptive trade. We are seeing some short covering coming in. If the levels of 3200 are held, there can be a swift short covering rally towards the level of 3300, 3350. That would be the target. So I think these are two names that can be on the radar.
Okay, thanks very much. Appreciate you joining in with those trades. Just actually three names I want to put out. One is L&T Infotech, L&T Technology Services, and then the parent L&T itself. Basically, both reported very good set of numbers. We'll be speaking with the management later on. But the point I'm making is that these are, technology and financial services together make up about 25% of L&T's overall numbers, consolidated numbers. So it kind of bodes well for L&T's overall results and what it could finally end up doing when L&T reports numbers. Could there be a beat versus consensus forecast? We'll see. Of course, a lot of the focus will be on L&T's underlying business as well, construction and other things, rather than what the subsidiaries do. But it does bode well for the consolidated number from L&T.
We're talking about the commodity and the currency space now. We have Manisha Gupta joining in with a roundup of all what we should be tracking from that space. Manisha, over to you.
Thank you so much for that, Ekta. Well, there's plenty happening in the agriculture space, and that is where you should be keeping an eye on in sense of prices, policy, the government attention. All of that seems to be on this one. But there's also more attention that we are getting in from WTO as well. India has updated the data on the food subsidies to the WTO, and this is the second time it's happening in 3 months. The point is that you can't change policies, but whatever changes in sense of calculations and numbers that continues to happen has to be told to WTO is what India and WTO actually has agreed on. The problem also arises as the US is claiming that India has breached permissible levels when it comes to its subsidies. The MSP hike on wheat and rice has been much on the higher side, and the WTO rules that cap the government procurement for subsidized food at 10% of the total value of production. While India claims that it is at 6%, US claims that we have far behind, crossed above 10% onto that one. But to explain more on that, we are now joined by Siraj Chaudhary from Kargil. Mr. Chaudhary, hi, thank you so much for joining us. First of all, we of course have seen a lot of policy changes when it comes to numbers, whether it has been the MSP hike, production-linked subsidies, and not just the MSP. It has happened in case of oil seeds, for sugar in sense of the FRP numbers that we see. What is your sense on where do we stand in sense of policy schemes right now?
Hi, Manisha. What's happening is, India is uploading its numbers to WTO as the thing it is expected to do, it is committed to do, and I think it's doing well to keep up to its commitments in terms of keeping WTO informed, which is part of the deal that was agreed to say that, okay, India will be allowed something, but they will have to keep the WTO informed. So I think India is doing a good job of timely information sharing with WTO. The dispute or the contention that exists is obviously been there for some time, and even as they've had various ministerial meetings and have failed to reach conclusions on most of them. And I think it will, India has its priorities, it has its challenges, and I think the government will remain focused on addressing those priorities. And some of this may clash with being a law-abiding country. We will take measures to control some of these areas where we may step out of line. But let's be sure that, in today's circumstances and the environment that we are currently in, I think the priority for the government would be that what it needs to do for their income and as well as keeping the rural economy going. So I think it is a fine line that we have to tread, particularly in a year for elections. There is farmer unrest and, of course, managing the WTO commitments. So it is a fine line that the government has to tread, but I think their priorities would be about meeting their domestic needs first and then finding a way to get around the WTO situation.
Oh, well, absolutely. So, what is your sense on what really could we see from here on when it comes to the agriculture sector? Because even as we have seen an MSP hike, even as there have been farm loan waivers, even as the state budgets are stretched when it comes to agriculture and other areas as well, there is still plenty to happen, plenty to be done when it comes to agriculture, farmer remuneration, etc. What is your sense in the next 1 year? What all can really be expected from the government then for this sector?
So there is a lot that is happening in terms of policy. So what is clear is that the government is taking all measures which it can through the policy to improve the lot of the farmer. But these are challenges that have existed for decades, and we can't sort of overturn them in a year. I mean, so whether it is about higher MSP, the fact remains that there is only so much that is procured under the MSP, and while we may have 23 crops covered under MSP, we do not have the wherewithal to procure from the government, by the government from the farmers in different states, and so some of the MSP sort of what looks like a good deal for the farmers may not actually reach them. And of course, the challenge is that if we do get there, or at least if that MSP is an indicator of price, then we are looking at food inflation. And even if the private sector steps in to produce and the government reimburses the prices, what do they do with these high-cost procurement? I mean, you do not have a market in the world because world prices are much lower. So, I mean, the solution for this is really not about increasing prices for the farmer, but actually increasing consumption. We cannot be expecting domestic prices of agriculture produce to go up across the board when the world prices of all those commodities are lower. I mean, we're sitting with milk and sugar and everything else with nowhere to go because the world prices are much lower. So the solution is really to actually explode demand in the domestic market, whether it is about food distribution, whether it is about, putting products through midday meals and various government feeding programs, because I think in the current short term, increasing demand will be the solution to manage the excess supply, because after all, prices are low because there's more supply than demand, I mean, basic economics.
Yeah, and especially the procurement prices are much lower than what we really have in the international markets. Siraj, thank you so much for joining us and explaining all of that to us. So clearly, WTO is one thing that the Indian government will have to handle. But that's one part of it. The other part clearly is the Indian farmers, whether it's milk and sugar and other commodities, where clearly there's a lot of unrest still.
There is no change to report as far as index levels go. 45 points higher, 11,130 is where we're at on the Nifty. 40 points off the life highs. Okay, Idea has been buzzing. I mean, I still remember 2 years back when our colleague Nisha broke the story. Idea essentially had jumped to almost about 120, 125 odd levels or so. It's at 56 now. And this after this 8% move that you're seeing. The deal is now all coming together. Finally, I mean, it looks like the deal will be consummated soon. This after Idea and Vodafone have agreed to pay the near 8,000 odd crores, actually 7,000 crores plus, as bank deposits, as cash, etc., to the government. Nisha is back with us here. She's been tracking the journey on this merger. Nisha, so are we finally close to getting this done?
I think it will be the second anniversary of our news break when the final merger announcement is likely to come from Idea as well as Vodafone as a done deal finally. That's how long it takes for such a deal to really fructify, it seems, and consummate. So final approval from the Department of Telecommunications after Idea and Vodafone, as we reported, has paid 7,268 crore rupees, and that under protest. And after that, are likely to get NCLT approval also as the final nod coming in for the merger in a few days. And that will take a few more days from now, a few more weeks from now. So in early August is when the Aditya Birla Group is looking at really signing off this deal as a done deal finally. So that's the timeline that we are clearly looking at. But remember that what has been paid to DOT has been under protest, we said, and they are likely to head to Supreme Court as an appeal against this particular amount as well. And therefore, if they at all win, and they have precedent from Bharti Telenor deal as well, then they can really get a refund. Now, cash is extremely important for this because the merged entity will start off its new, journey with over 1 lakh crore rupees of debt on its books. So it is going to be difficult, and that's precisely the reason the stock has also plummeted to such lower levels at this point. So what we are really looking at is the final consummation of this transaction, and that uncertainty of this deal really consummating, going off, is giving some sort of a relief to this particular counter.
Nisha, the next steps essentially is going to be from a market angle is going to be watching synergies, etc., right? I mean,
yes.
The guided synergies, immediately they said that we'd save about 2,000 crores or so on merger of the sites. And then, I mean, the rest of the synergies are gradual. The numbers are large, but I think that's where the key lies. How much of that they're able to extract.
So in the 4th year of full operation, they said that the full synergistic benefit will be realized by the companies, the merged entity, but they will continue to get the synergistic benefits. One part also of the synergies was sale of non-core assets. So Idea has already sold that tower business, and that has already come in, and Aditya Birla Group has already infused equity funding into the company as well. So now the next few steps would be, first, how much Vodafone is putting in as part of the merger, and second, what efforts are being taken by the companies to raise more equity funding. That will be the key to watch out for, and that will help the stock going forward, because the debt concern for this company, even though they've combined together, is going to be huge.
Okay, all right, Nisha. Thanks very much for that. So I think the market is taking note of what exactly Nisha is saying in terms of the DOT approval, etc. So the stock is spiked up to a gain of around 10% as we speak. So at around 58 odd rupees. But besides that, we have Asian Paints, which is going to be reporting its Q1 numbers today. I think it's already at another fresh record high in today's trading session. The stock is up around 1.5%. Mangalam is here to tell us what we can expect from the paint major today. Mangalam.
Well, you said it, Ekta. You know, the stock is at yet another record high ahead of numbers, just like a lot of the earlier FMCG companies, HUL, for instance, that reported their numbers. So not particularly cheap, trading at 48, 49 times 1 year forward earnings, rather 2 year forward earnings. So that is something we will have to watch out for. In terms of numbers, the three key numbers to watch out for in Asian Paint, 16.5% is the kind of growth that we're expecting on the top line. 44, 50 odd crores is what the street should be looking at the top line. In terms of EBITDA, we're expecting a 24% growth on the company's EBITDA front. Margins are likely to expand. This may sound counterintuitive given crude prices have risen as well as the currency has depreciated a little bit. But remember, the companies have taken a few price hikes as well, and the crude impact would come with a bit of a lag. The net profit on the back of increased margins and higher revenue likely to grow by 20%. That is something we're watching out for. Told you about 16.5% growth on the top line. That would be led by 12 to 13% growth coming by on underlying volume growth that will come from their decorative business. Why is that? Because remember, Q1 FY18 was a low base. 3% volume growth is what we had seen. On the back of that, the company is likely to post 12 to 13% in terms of double-digit volume growth. In terms of the other management commentary that you have to watch out for, definitely keep an eye out on input costs and also what they have to say about competition as that space is heating up.
Mangalam, so rural, as they define it, is what? Asian Paints sales are about 50% rural, approximately?
Would be around 45-50% of their sales.
Okay. I remember a couple of quarters back, they reported a big surprise on the rural side, and there was a second level impact on a lot of rural companies as well, predominantly rural exposed companies. Anything of that sort this time?
Well, not in particular, Prashant, because the first quarter is usually weak for cement companies. It's the second quarter and the second half in particular that we watch out for. But incrementally, any signs of uptick from demand coming in from the rural space would be positive, because that will tell you, that will set the tone for the remainder of this year itself. And if trend is something to go by, for the last few quarters, 2 quarters that is, all the FMCG companies are saying that they are witnessing rural growth which is higher than urban growth, and that trend is likely to continue in Asian Paints too.
All right, Mangalam, thanks very much for that. So that's Asian Paints. The stock has in fact given returns of 25% year to date to shareholders already. Well, for the Nifty, 11,130 is where we're at. So absolutely static at those levels for the past half an hour odd. Ashwini Gujral joins in to discuss the technicals of the market then. Ashwini, over to you. What does it tell you? The Sensex at an all-time high, Nifty around 30 to 40 points away. Are you enthused by it?
This is a rally of underperformers. I'll tell you what is down. Bajaj Finance, Jubilant Food, Hindustan Unilever, Bajaj Finserv, Kotak Mahindra Bank, Reliance Industries, Tata Consultancy and Bata, just to name a few. So this is a pullback rally, and pullback rallies finally come to an end. But I would think 2 or 3 more days of this sort of pullback can continue. But I would like a few of these, large heavyweights, outperformers also to perform in this market, and that really creates an issue, because if the outperformers don't move up, Nifty will probably start petering out at higher levels. Now, having said that, I think Bajaj Auto has bottomed out. Now it can hang around here a little bit between 2650, 2750, but a lot of damage has been done. So you generally tend to buy stocks, of good pedigree, etc., once they are in some kind of trouble. So maybe buying Bajaj Auto here, we'd say a stop at 2650 and target of 2775 is a good idea. A bit of a longer term type call. And the rest, JSPL is a buy with a stop of 190, target of 204. And VIP Industries a buy with a stop of 437, target of 460.